Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Wednesday, September 11, 2013. Well, a continuation of the trends of the upside today. The candle we're analysing is this second last candle on the chart, and this candle has made a higher high and a higher low, therefore continuing the trend that we saw for the previous day's trading. For the previous day's trading, we had a small white-bodied candle suggesting there was a possibility of a change of trend at the end of this solid first time frame uptrend, and something of a tweezers top pattern, not quite perfect but almost a tweezers top pattern, but we were looking for confirmation of the change of trend, and the market hasn't traded anywhere near the low, so confirmation would have been a candle with a lower high and a lower low. We have the opposite to that. We have continuation with a higher high and a higher low. We also have a nice increase to the size of the body of this candle, and it suggests that the buyers have found some more solid upside momentum in net terms. They made a substantial amount of net bullish progress on the day between the open and the close, and that suggests that the market has a potential to trade to higher levels. Now, we've also seen the market close up towards the high, so the buyers have closed with control of this market. But interestingly, if we look at where the market traded to, it traded to the important 133.20 level of previous resistance and support, and has been rejected from there, only rejected in a minor way, but it may be significant that the market has failed to close up above that area and successfully test above there. The market has also tested above this highlighted yellow zone and closed just above there, so not a strong signal, if you like. Would have been better to have seen a very more substantially bullish close above there and further above that highlighted zone. But we can't argue with the short-term dynamics based on this current candle. The buyers really do have strong control of this market. They've only lost a small amount of commitment trading above this yellow zone and above the 133.20 level of resistance. And if we look at the bottom of this candle, we have seen the sellers lose commitment down at the bottom of this highlighted zone. So a market where the buyers are very strong, and they may be building some solid momentum to trade up above and close above this 133.20 level. Just above the 133.20 level, we had a minor level of some previous resistance in the recent past at 133.42 roughly, so there's an area we should be looking to, and we did have some decent rejection. These shadows on the top of these candles highlight some rejection from this zone extending up to 134, but 134 has been an important level in the past, so if the market does test up through these levels in a bullish way, we could see the market testing to 134. Now, in terms of the Fibonacci extension, and here today we've seen the market test exactly to the 261.8% level and be rejected from there. So this hints that there is a possibility of a change of trend, but certainly no sign of that happening. The short-term dynamics in this market at the moment are quite strong, favouring the buyers. So even though we've had this rejection, it certainly doesn't look likely, but we should be watching this level, 133.24, and that's where the market is basically trading to at the moment in this trading for this current period that's just opened. So an important level, and if we do see the market trade through, then the next target is the 423.6% level, but won't come into play for quite some time. The Fibonacci retracement is giving us a slightly different story. Here we saw the bullish breakout above the 100% level. Our next target was the 161.8%. We've broken out above there in a strongly bullish manner today, and this suggests that we may see some strong follow through in this market. So we're looking for a continuation of the trend to the upside with a higher high and a higher low. The target here after this level is the 261.8% level at 134.12. So that's just above the important levels that I've already mentioned, suggesting that the market may trade higher. In terms of Ichimoku, a bullish market in all three time frames. The market is trading up above the clouds, so bullish in that long-term time frame. The market's also trading above the Kijun Sen and the Tenkan Sen, so we're bullish in the medium-term time frame and in the short-term time frame. But the Chica span here is within the corresponding price action, so failing to confirm what we're seeing in these higher timeframes, and this suggests that the market may find some resistance here around the 133.20 level and come off. The problem here for the sellers is that we have this large highlighted zone, and there should be strong support all the way through this level, extending down to the 132.50 level, so an area that may limit any downside if we do see the market come off and the sellers come back into this market. In terms of the Q-Tunes, then, that is pointing flat. Price action has been attracted back towards this, so whilst it's flat, we could see price action attracted back towards this, so that's suggesting that there is a possibility of the market respecting the solid resistance at 133.20 and moving back down to lower levels. But really what we need to do is watch how this market plays out. If we see strong early bullish activity up above the high, it may suggest that the market is continuing the solid upside momentum that we saw for this current day's trading that has completed, and suggest that the market may end up trading to higher levels, and we could see some decent follow through and initially a test to this previous swing high roughly around that 133.45 level, and then even perhaps beyond. But we have a target up at the 134 level, and also targets based on our Fibonacci techniques if this market does break out in a solid bullish manner up above 133.20.